Hello everyone and welcome to the February edition of PwC Nigeria's monthly tax podcast series. This will be our first podcast this year and we'd like to take a second to welcome you to the 2024 season. We hope you took some time during the break to enjoy our previous episodes. Last year, we discussed various insightful rulings by the TAT and other regulations issued by the FIRS at the time. Please check our page for further details and we'll be happy to respond to your comments. My name is Chisom Urom and today I'm joined by Esiri Agbeyi, tax partner at PwC Nigeria and family business leader for PwC Africa. She's a seasoned professional with vast experience in these matters and she'll be sharing more about that later on. We're truly excited to have Esiri on our show today. Welcome, Esiri.
Thank you, Chisom. Great to be here.
Today, we'll be discussing two news items. Firstly, a circular on fiscal incentives for the gas sector released by the Ministry of Finance in December 2023. Then, a Federal High Court ruling which established that tax deposits are not mandatory for tax cases to be heard. We'll also take a dive into family businesses later on and educate our listeners on the key takeaways from recent happenings in the private world space. Right, Esiri, we're excited to hear your perspectives on these topics, so let's begin.
Sure.
Starting off with the Ministry of Finance's circular, can you please give us some background and share some insights on that?
Yeah, the previous administration had introduced the decade of gas, as we all know, with the intention of ensuring that we had gas sustaining or powering the economy into the future. And what the Minister of Finance has tried to do through that circular is to ensure we had fiscal advantages as well for that industry. The circular goes on to provide some exemptions, VAT exemptions on gas, specifically CPG, LNG, all equipment associated with it, conversion and installation services. And very differently from the VAT modification order that we had in 2021, it introduces new exemptions such as allowing that feed gas into the gas sector is also exempt. Prior to that, we did have specific exemptions only for gas that was supplied to Gencos. So this is a very welcome development, but I think there are more issues that we probably need to uncover with that circular.
Well, thank you, Esiri. That was a very helpful kickoff intro. However, there have been some comments about the legality of this circular. What are your thoughts on those?
Yeah, I think some of the issues raised around the legality are valid because what we saw is the Minister of Finance did pronounce these exemptions through a circular, whereas the VAT Act requires under Section 38 that the exemptions or any amendment to the first schedule to the VAT Act should be by way of order through a gazette. Correct. So this hasn't been gazetted. This is in an order and it falls flat on the surface of the Act. The other thing as well that this also draws out is perhaps even how far back these exemptions go and how practical as well they would be, because the circular does mention that the exemptions go as far back as 2019. So one may start to wonder how practical is it to get those refunds anyway. But again, these are welcome developments. They're incentives as opposed to additional obligations. So we expect naturally that it will take its course as it's a practical advantage to the industry.
Well, that's an excellent breakdown. Moving on to the next news item. The Federal High Court has nullified the mandatory requirements to pay a deposit of a disputed tax amount before filing your appeals before the courts or even the tax appeal tribunal. What do you think led to the Federal High Court's ruling in this particular case?
Yeah, so there had been rules issued by the TAT around making those deposit payments on the back of the FIRS Establishment Act, even though to some extent they weren't necessarily written right, because there are conditions that could trigger, the payment of the deposit, including the FIRS establishing beyond reasonable doubt that the taxpayer was indeed required to pay those and that their appeal was frivolous. The rules did say you just had to pay those deposits. Yeah. But then you also had practice notes issued by the Federal High Court as well in 2021, and then another one as it relates to tax appeal in 2022 that either required half of the payment or the full sum of amount being appealed. But what we saw in the multi-choice case perhaps affirmed some of those rules to say that multi-choice's case was disregarded because they hadn't made that deposit. And then there have been challenges that have succeeded, that, including the one with Joseph Boduri Dauda San versus the Minister of Finance, Budget and National Planning, and also the investment holdings case, where there was actually a detailed analysis of the provisions of the FIRS Establishment Act, but also of the Constitution to say that there was no basis for making those type of deposits because it was an infraction on the taxpayer's rights. So I think this is a welcome development, and hopefully we might see either a change in the approach of the FIRS regarding how those rules are interpreted in the Establishment Act. But then judging also from other jurisdictions, there might be modifications that could ensure that taxpayers do not also unduly use those provisions to their advantage, because what we see in other jurisdictions is sometimes a requirement to pay, but on balance, the tax authorities having to justify why those payments should be made.
That's very true. And as usual, you've given us so much to think about, and thank you for those very informative answers. They were elaborate. But these alerts clearly affect Nigerian businesses. So let's talk more about some critical issues that affect businesses, especially family businesses. Now, Julius Baer recently released the Family Barometer 2023 report in collaboration with PwC. The report highlighted 5 major factors affecting family businesses. Interestingly, the top 2 were tax and regulatory issues. How would you describe the topical trends affecting family businesses, and how is PwC best positioned to support such families?
So I particularly like the fact that these barometers are done every year. And what we saw is there wasn't really a big change from last year and the year before. So the issues are still consistent. And with the geopolitical changes that we're seeing as well, it's really a re-echo of the fact that family businesses are bothered about certain things. One of which is we're seeing a lot of issues now becoming borderless. So everything that has to do with a family business could very well be replicated in other jurisdictions that they do not necessarily operate in. So take, for instance, Nigeria. Just the mere fact that Russia and Ukraine were at war affected also the supply chain in Nigeria, but also affected our exchange rate and the pricing of those products. And so family businesses continually are exposed to such. And the way in which they need to address those really is around thinking deeply around the structuring of their affairs and how they expand into these jurisdictions. The second topic, like you mentioned, that was mostly discussed was around tax affairs. Tax is really becoming topical, and it continually increased in the last year, according to the report, because you'd see that a lot of countries are struggling with managing their budgets, most of them even reporting budget deficits. And so the natural course is to resort to taxes as a way of generating public finance. And so taxes therefore become something that you need to plan around. Otherwise, you expose yourself to margins that are gradually eroded because of non-compliance issues. I think other issues too that came through from the report around political instability being something that still needs to be discussed.
That's right.
Next generation and family governance issues, and more specifically around succession planning, ensuring that businesses remain continuous, and also planning against key man risks in those businesses. But the third point also related to that is really around educating the next gen so that they are ready to take over those businesses.
Well, thank you so much once again, Esiri. You've really shed some clarity to us, listeners and our viewers on these matters.
My pleasure.
Now, I recall hearing your conversation around families creating emotional connections and encouraging storytelling on the Next Gen podcast. And following on from that conversation, here's a thought. If there was an ideal roadmap to enable African businesses to become more efficient in succession planning, what would that look like?
Yeah, I think the first thing to recognize is succession planning is a process and not an event.
Okay.
Failing to plan definitely leads to succession planning not being successful, if there was a word like that.
Okay.
And I think recognizing also that there are two protagonists in any succession planning. One would be the successor,
Okay.
and one would also be the predecessor. And the two have to be ready and prepared to make that journey into the future. Unfortunately, most businesses or families aren't ready to the extent that, it feels like it's one person just leading the show, which would then be the predecessor. So I call the shots. When I'm ready, I hand over the baton. But then think about a relay race. Everyone needs to be ready to take the baton. Otherwise, you let the whole team fail. So I think preparation, communication, making sure that we're all ready to take the baton and run to the end is very critical. Ensuring that it's not seen as an event, but more a process is also very important. And getting everyone ready across all the various lines of the business. And when we talk about the business, it's also the family as a subset of that family business, the business by itself, and all the wealth that accumulates from that process. Everything needs to shake their hands properly. Otherwise, there is a break in that linkage and it all falls apart. It's interesting that we're talking about this on a tax podcast, and ask me why.
Why?
Because when you think about the business as well as a structure, there are certain things that disrupt the flow of that structure.
Okay.
There is an emotional foundation to the structure, which is ignored most times, and it sits in the family subset. But in the business itself, all of the numbers that add up to whatever wealth we're going to recognize in that third subset can very easily be eroded by taxes. And so making the connection between those three is important, but also understanding that taxes can disrupt all of that is also important to know. Right from when the business is formed to when the founder takes over or when the successor takes over, there is inheritance taxes to think about, there is operational taxes to think about, there is corporate taxes to think about, individual taxes to think about. And so we try to make those dots when we work with family businesses every step of the way.
Well, that's a very, very elaborate plan. And it would be nice to see more African businesses adopting that roadmap or a similar approach, really. Still on family businesses. I know that last year was an active year, very active year with PwC Africa in the private wealth space. Could you share a list of what we can expect in 2024?
Yeah, in 2024, I think following from the family barometer, some of the issues that were raised are things that we think family businesses will continue to pay attention to. It will be interesting to also see how family businesses are diversifying their wealth, given the shocks that we continue to see, whether it's from the inflation rise and not being able to price products properly, to foreign exchange devaluations that mean that you must hedge your risk with external assets. And so helping businesses structure right, choose the right location, for instance, for their holding companies, choosing the right location for their trustee services, if there had to be one, trying to identify what your footprint is, especially as we continue to see increases in second citizenships. And that's happening for good cause because people want ease in global mobility, but those also have tax concerns. So I think we would generally see a lot of increase in that, as people start to stabilize and prevent all of the shocks that we're seeing in the economy. But it's really, how can we help businesses pass through these turbulent times and still remain above water?
Great. That's so many great points for what to expect in 2024. Thank you so much, Esiri. That was a very elaborate deposition.
Thank you, Chisom.
Yeah. And as always, we hope our viewers and listeners will continue these conversations on their end. Do you have any final thoughts to share?
Yeah, so we've only just shared very short highlights on the podcast. I really would love to welcome a lot of our audience to go to our website, but also download our Tax 247 app, which provides a lot more details on tax laws, tax cases, and analysis of those that could help you plan right. Also welcome you to visit our podcast on issues as it relates to family business succession and also getting ready the next gen for the future. We hope you'll be part of our Next Gen Academy, which is going to hold in New York with the Columbia Business School. And it's really for ages between 21 to 28, sometime in June. We also have another one for those who are older than 28. Don't worry, never too old to learn, in IMD Lausanne in August. And then we also have our monthly articles, which we write with Business Day on My Family, My Business, that runs through contemporary issues and tax issues that family businesses need to be aware of.
Okay. And with that, we've come to the end of this edition of PwC Tax Recap. I'm Chisom Urom, and it has been exciting as your host today. Bye for now.